Hey guys, welcome to lesson 11, which we are going to call the big picture and zooming out, because people tend to love to do this. They have the daily time frame and they go, Sarah, I have a pivot machine gun set up on the daily. What do you think? And to me, the daily time frame is trading blindly. If you're only looking at one time frame, I have no context for this trade. I don't know if we're at exhaustion risk. I don't know where we are in the broadening formation. I don't know if we have full time frame continuity. I don't know anything. So when you are trading, don't get sucked into single time frame analysis. This is not enough information to base a trade off of. I don't care if you're a day trader or a swing trader, you need to have multiple time frames up. You need to have the bigger picture in mind. Because people will see this like, oh, Sarah, this is a pivot machine gun to the upside. Well, yes, it is, but not all pivot machine guns are created equally. We only want to trade pivot machine guns when we're at downside exhaustion in this case, or on the bearish side if we're upside exhausted. So when people just post this, like, oh, we have a 2 down, I'm looking for the 2 up. Do you think this will work? And I'm like, I have no idea. There's nothing on this chart that would signify this is okay to take. So let's look at it. So we have a doji 2 down day. If you were trading in full time frame continuity, meaning the month, the week, everything was green, yes, you could take this. The trigger would be 86.61, the high of that candle. Target 1 is here. Target 2, target 3, you get it. It's a pivot machine gun. But is it an okay pivot machine gun to take? Well, I don't know. We have to go into the higher time frames. So this is Amazon daily. So what I encourage people to do is have 3 time frames up. I always have the month, the week, and the day, because this gives me context. Now, even though I'm a day trader, I am still starting at the monthly time frame. This is my big picture analysis. So I want to know where price is going. So based on the monthly time frame, I know that we are coming to take out this pivot. Okay? So that means the month is red. So we have full time frame continuity to the downside. And this is our target. Our target is 81.30. That's this candle's low. Okay? That is where the draw on liquidity is and what the target is. So when we're trading up here at 86, why would I want to take this to the long side knowing that we're most likely going to head lower? And if this does trigger to the long side, this is more than likely only corrective activity, and I should not expect my target to get hit to the upside. I should not be taking this to the long side. I should be waiting for a 2 up to be corrective activity. We just talked about corrective activity in the last lesson. Corrective activity happens usually before you hit your target. So our big picture target is bearish and to the downside. So we don't just want to take this trade. This would be a very low probability trade, right? So I want people to zoom out, get the bigger picture, trade with the trend. Even though everybody wants to be a bull, you can't be a bull in a downtrend. It's just that simple. Okay, so let's see kind of what happened. So the next day opened right here, triggered the 2 down, 2 up day, and failed. And why is that? Because we're in a downtrend. You can expect corrective activity not to hit target because it's counter trend. It's against the trend. The bigger trend is down here at 81.30. So you, knowing this, knowing that 81.30 is your target, you don't take the long. You take the shorts back down. So zoom out, get your bigger picture. Okay, the following day, what did you get? You got a 2 up, 2 down that went really far, okay? It hit your target one and then kept going. We didn't quite hit the yearly target. We came really close this day, but the point of the story, zoom out, know your higher time frame targets. Don't trade a chart or try and place a trade solely on the daily time frame, super zoomed in, because you're going to get killed. If you look right here, here's a 2 down, 2 up bullish reversal also that also didn't hit target. Because why? Because we're in a downtrend and our bigger target is 81.30. We came within 13 cents of it on the year. So I hope this resonates with some people. You cannot just trade on the daily time frame. If you are trading only on the daily time frame, that tells me that you don't know the strat and that you're only trading this sheet. In this sheet, I refer to as the tip of the iceberg. The strat is so much more than this. It's multiple time frame analysis. It's time frame continuity. It's broadening formations and knowing where you are in the broadening formations, knowing where you are in full time frame continuity, trading with the trend. So don't get so sucked in to a single time frame and completely lose the big picture. This is probably the number one mistake that I see new stratters making. They're only looking for setups and completely ignoring everything else. That will get you killed, I promise. So zoom out, know the bigger picture, know where you are in your broadening formation, and make smart choices about the trades that you take going forward. All right, catch you guys later.